Welcome back to Turning Hard Times into Good Times. I'm here again with David Jensen, who's with me almost every week. Welcome, David.
Morning, Jay.
Good to have you with me again. As always, we like to talk to you about the latest developments in the precious metals markets primarily, and then some of the other things that are going on that affect those markets. Let's just go over some of the points that you raised in an email to me earlier today. The GOFO rate is positive since May 20th. Again, it's positive again. So it was positive for quite a while, and then I guess it turned a little bit, but now it's positive again.
Yeah, it's been cycling since last July between positive and negative, but I think it's the fact that it's been negative for more than 100 days during this period that is notable versus the 7 prior days over the prior 25 years. I think also of interest here is it's just barely positive on the 1 month. It's 0.05% today on Monday, the 16th of June. But I guess there's a number of factors here to consider. One is that you and I discussed the fact that Ecuador has lent its gold to Goldman Sachs to generate a small portion of interest on the gold holdings. So Ecuador has basically lent its lifeboats out into the market. It feels it doesn't need them. But I think what's interesting here is if we look at the London market, the leverage, which the Reserve Bank of India estimates to be 92 to 1, so of the order of about 100 to 1 in round numbers, if you take that Ecuadorian gold of 466,000 ounces, that becomes 46 million ounces in trading positions in London. So, the leverage works in both directions. When gold is tight, it has an outsized impact. And when you get a small amount of gold, a slug of physical, you can create a lot of trading positions with that. Mm-hmm. So the question is, how long can this paper market continue? My view is that the market really functions as a stream or a river, and it flows around obstacles when it detects them. And it is interesting. You noted to me about the Dubai gold trading center to become a major international center for trading. They've got now a 2,000 ton per year refinery that's being completed there, and I look at Shanghai and Singapore, Dubai, Moscow. They're going to become, I think, the major gold trading centers because they're going to be dealing in the physical metal itself. To set the price of gold, trading on the spot market as opposed to these leveraged instruments in London and New York.
But David, isn't Dubai sort of in the hip pocket of Washington?
That's a good question. I think it's probably somewhere in between. I think it's being pulled in multiple directions.
Uh-huh.
I think the Middle Eastern holders of cash will be as concerned as anybody in terms of maintaining their value. And that's a region which has, first of all, a history of demanding gold for oil. But also there are people of all stripes there that coming from around the world. And I would think it's probably being pulled in multiple directions at once. Mm-hmm. But I think that, the intentions of the political sphere, versus the global wealth protection of wealth through these times are the competing forces, and we know you can fight the market for a period of time, but ultimately the market will dominate. So I think it's just, in my view, a period of time until these physical trading centers become the dominant forces, and the London and New York markets basically go to sleep.
Yeah, well, somebody's got to wake up in America before people start to think that way, because they've got everyone down on the mushroom farm here. We fed fecal matter and kept in the dark so that people don't really understand what's going on. Clearly, the Ecuadorian government doesn't understand, and what they've done is given some more oxygen to the guys that are manipulating the gold prices, it seems to me. But you talk about markets ultimately prevailing. We're seeing a tremendous amount of stress apparently in the silver markets, with a silver premium of 5.3% in Shanghai. Talk to us about that.
Yeah, it continues now to be substantially at a premium to the price in London. It's 5.3% today. It was 6.6% last week. The silver market is interesting because London shut down its daily silver fix. It announced that it would be shut down as of August 14th. And I take that as an indicator that the combination of paper trading with the occasional physical metal moving through the market, that they're unable to sustain that. And that would make sense because there aren't these massive above ground silver stockpiles in the hands of official sector holders, such as central banks, so they can't be leased into the market. So, we would expect silver to become a market in duress much sooner than the gold market would be, or the unsustainability of the paper trade to show itself there. And we will see what happens with the silver market. But it is interesting. This level of difference indicating that the London price is not a true global price for silver. It's just interesting to watch that, and this may be a sign to us of why this London trade, the daily fix, was shut down.
Yeah, so when you have these premiums at the short end of the market, it's indicating duress, stress. There's a shortage, seemingly, of physical, so that's very interesting. But when you're talking about shortages of physical, nothing compares right now to the platinum and palladium market situation. And the South Africans, there's some talk that they have settled a strike, and the platinum and palladium prices went down quite a bit last week on that news. But what's your understanding of how that situation stands now?
Well, there's an offer that's been made to the AMCU, to the the major South African mining union. It has not been accepted yet officially. It's really in flux right now. It's difficult to say in terms of the intent of the leadership of the strikers and the strikers themselves. So there seems to be a bit of a bifurcation there. Even if it is accepted officially this week, we're looking at 3 to 5 months to restart these mines after they've been shut down for such a long period of time. Mm-hmm. And so I think that we've not even started to see, or maybe that's an overstatement, but we haven't seen the full impact of the physical shortage yet in the market. In addition, the Russian State Metals Agency announced a couple of weeks ago that they are intending to step into the palladium market, wow, of which South Africa supplies 40% and the Russians supply 40% of the global mine supply. And to buy in this market, that's going to have an impact as well as sweeping away supply just at the time that you're being pinched by a constriction of the supply from South Africa's mines. And I guess the third factor in terms of the market is that there's been we've touched now on the shortage of supply, but also what that does to the sentiment of the buyers. And, looking at the smog problems that they have in China and the 80% of the world's palladium comes from Russia and China together, and about 90% of the world's platinum supply, and these are key elements in catalytic converters to strip out the pollutants. Mm-hmm. We have to wonder about China and some of these other centers now looking at the instability of supply and actually forward buying and stockpiling material to ensure their supply. So there's a lot of things in play here, and I don't think that the market fully comprehends the impact of this South African shutdown and what it does to many factors in the market. So we have to see how that plays out. But very small markets, about 6 million ounces a year from each the palladium and the platinum mines. Mm-hmm. And the largest overhang out there that we see in the market was the ETF holdings, which ran about 2.5 million ounces each. And there's been some speculation that some of that metal may be leased into the market. But certainly it has to be returned at some point. And, I just don't think that we fully comprehend, the market fully comprehends the true dynamic at play in the platinum palladium markets. But that would be the one that I would think would take off the quickest, and we will see now in the months ahead how that does.
So those people who might be tempted to go out and buy an ETF may not actually own the platinum and palladium they think they own.
It's the same old story, isn't it?
Yeah, the same old story about the fox guarding the chicken coop, it seems.
Yeah, and China also, the news from China last week about the rehypothecation of copper and aluminum, which was supposed to back the loans there, and then the panic where they shut down 2 ports to prevent any shipment of the copper and the aluminum out because the old saying, there's no sense in panicking unless your first comes to mind. Because I think what happened in China there was that some of the banks that realized that they didn't actually have the backing of the loans, which they thought they did because of the rehypothecation, started to seize the copper and the aluminum and ship it away to their own private vaults. And, these types of things we're seeing pop up all over the place. And certainly we know it reaches into the gold market with the shutdown of Rabobank and ABN AMRO a couple of years ago of their gold trade, which was similarly rehypothecated several times. They just simply shut down their accounts and gave their customers cash. So
yeah, sure.
I think we'll see it many times in the years ahead, I'm sure.
Yeah, well, you just create the cash out of nothing. As long as they're able to do that, as long as people have confidence in the euro or the dollar or whatever, they can continue to do that. But you just have to wonder how long can that game go on. And just wondering, David, you mentioned with respect to copper and aluminum in China, has gold been mentioned? Because I know there was some speculation in the gold markets that contributed to a weaker gold price, that rehypothecation was going on with gold as well. Has there been anything recently in the news about that in China?
Well, there was mention last week is that the price jumped a couple of times, and that there was a sense that it's implicit that if there's a problem with the copper and aluminum markets, that there must be a problem with the gold market. Why would that exclude any gold backing from having been given the same treatment? Yeah.
Okay. And getting back to the platinum and palladium markets, have you seen any positive rate there on the go forward rate?
Well, the lease rates, Kitco is no longer a reliable source for daily posting of that data. But, the lease rates are basically the ones that are showing the most recently are about where they were a few weeks ago. So not seeing any tremendous change there yet, Jay. And I really can't comment, with any kind of authority on that because I don't trust the data source anymore.
Right. Okay. Well, it certainly would be, and I know that you've suggested maybe a couple of mining, platinum and palladium mining plays might be worth looking at, and I've certainly picked up on a couple of them that have done pretty well since your suggestion. Thank you for that, David. Just one more issue I'd like to ask you about, get your ideas on, and of course that is geopolitics, and we're seeing things really flare up in Iraq. We've had the Ukraine, which has really caused a lot of tension in the markets, and at least in some markets. Although it seems the equity markets haven't been touched too badly by any of this stuff. But you see some significance about what's going on in Syria, in Iraq and Syria now? Talk to us a little bit about that.
Yeah, well, I mean basically the NATO and the U.S. funded disruption in the Ukraine and confronting Russia and creating a disturbance there, and now seeing it flowing into Iraq in the last couple of days is really it's disturbing to see that.
Sure.
We know last year that the death of Ambassador Stevens and the whole association of that Benghazi annex, which was apparently a weapons transfer point, and that they were actively flying and shipping by ship weapons to Syria out of Libya after Libya was destabilized in the involvement of Hillary Clinton and some of the others in that. Seeing John McCain over in Syria talking about the Al-Qaeda in Syria and really equating them with freedom fighters. And now today, and the last couple of days, all of a sudden this ISIS group, which is Al-Qaeda, it's a relabeling of Al-Qaeda. They're flying the Al-Qaeda flag, certainly. And to see them sweeping down now through Iraq and creating chaos with weapons and funding from NATO and the U.S. is it's just incredible. And I think that you'd think that the people in the armed forces have to be looking at this and just thinking, what is going on here?
Yeah.
If the politicians aren't concerned, you'd certainly think that the leaders of the various military groups of the services would be just perplexed by this, because their people are being killed. And we're just basically creating chaos wherever we go, we being the West. And, it's being marketed to the citizens of the West, through the news that we get in a very different fashion. But I think the availability of the information that's, really it's not characterized nearly as much as it is in the news media through sources like CNN and CNBC and others. But when you look at the data, it's astounding what is going on.
It doesn't make any sense at all, and I have to wonder if calling Al Qaeda ISIS now is a rebranding in order to make because after all it was Al Qaeda supposedly that hit us on 9/11. Ron Paul would say in various times when he ran for president that the reason they came over here is because we're over there. I mean, it doesn't make any sense at all that but this is nothing new. Our policy has been to support both Iran and Iraq, for example. We support different factions all the time, and it seems almost, David, as if what we're looking for is to try to stir up and generate civil wars everywhere so that there's total destruction of the existing order. That's the only thing I can see from it. And if that's the case, who in the heck is behind that?
Yeah, it's difficult to know, but it's just we see the pattern. And citizens, I think, have to be concerned in terms of the chaos that we are creating around the world, as opposed to focusing inward and stabilizing our currencies and stabilizing our economies, and facing up to the fact that the low interest rates have really crippled the economy and prevented our economies from recovering, coming to acknowledgement of that, and then moving towards a restabilization of our economies. I mean, that's what really is needed here. And instead, it's the old dictator's playbook that when you have troubles at home, you create chaos elsewhere. And it's so hard when you come through things looking through the lens of the belief in the Western way and democracy to believe that we would be doing these things. But it's hard to come to another conclusion when we see this pattern of disruption globally.
Yeah, and of course that pattern is not very clearly defined in the mainstream media, and you have to wonder why that's the case as well. Whatever happened to people that were really looking for truth in the media? It's sort of hard to figure out what's going on. You have to go to the internet and find alternative sources, basically. Sadly, it seems to me that Russian television, RT, provides more truth about what's going on than what our major media does. So the impact of all this, then, I guess, bottom line, if we could summarize now, David, with this with these goings-ons in Syria and Iraq, so what? I mean, Americans are sitting back here enjoying their television. Life is pretty good for most people. I guess a lot of people are hurting in the middle class. But if you live and happen to live in the major cities around the financial areas where the parasites are thriving and doing very well, and New York City, wherever the financial system is strongest, so what? What does this all mean in terms of where we're going and what we should be doing with our money?
Yeah, well, I mean, looking at the big picture as a whole, I think it's time limited, and I think we have to go back to John Exter's work. He was on the Board of Governors of the Federal Reserve, and I mean, it distills down to, Jay, that the virtual perspective that we have in terms of the information we're presented from the financial markets works as long as there's gold liquidity. Yeah. And when the liquidity stops, and I think it's in the processing of stopping, and I think that the shutting down of the London silver fix is a first major indicator that it's unsustainable in terms of manipulating physical markets with paper. It will stop, and it's just a question of how long. And we're kind of coasting along on momentum here, but it's we're seeing so many signals. Oil well over $100, and I mean, we're supposed to be in an economic time of economic malaise globally here, where they continually cut back GDP growth estimates. And why is oil not $20 a barrel as it was 10 years ago? Mm-hmm. So we're seeing all these signs of drop in currency buying power, unsustainability of the physical market maintenance, which has been going on until this date by leverage of paper. And so I think that maybe to get right back to your question about what are you supposed to do, I think there's very few assets which hold wealth when the financial system finally shows the complete lack of structural soundness which is there. And I think gold and silver will be at the core. I think oil and agricultural assets as well are key. Food production assets are key, and it's interesting to note the tremendous consolidation in the agricultural industry by the deep-pocketed investors that's going on right now. So, those are kind of the key sectors for me: is energy, agriculture, and precious metals. Yeah, it's an unsustainable situation. The question is just, when does it actually stop? And that's always the tough question.
Yeah, that's very difficult. Well, that's one of the reasons I like to talk to you every week, to keep an eye on things, and I think you have as good a perspective as anybody in watching some of these various events and how they sort of fit together in the bigger picture. So I want to thank you again very much, David, for being with us, and really enjoy talking to you. And next week I'm actually going to be traveling in Portugal with my wife, so I guess we won't probably meet up next week, but I look forward to, as soon as possible, getting back with you again, David. Thank you very much for your time.
I'll look forward to it too, Jay.